Hi, welcome back my fellow Baba bag holders. It's the time of the year again where we wallow ourselves in self-pity and try to brainwash ourselves that we are investing for the long term because our entire portfolio is down. So I know that the markets have been extremely brutal over the last few months, and if you were to look at it in totality, it very much feels like whatever that happened to Chinese tech in 2021 is happening to the broader market sentiments today. Essentially, a summation of negative headlines after negative headlines. So you have a stubborn inflationary environment, an impending rate hike, a possible recession, supply chain disruption, China COVID controls, a leverage crisis, and the list goes on. So I think volatility is definitely expected. No shit, Sherlock. But it's more so because the market don't know what to expect and are constantly adjusting their expectations in line with the new headlines and breaking news. So increasingly, at least amongst analysts and also in the social media space, there is an increasing divergence in opinion in how the market is able to tide through the upcoming challenges. So the further the divergence, the greater the amount of volatility as they fight it out amongst themselves, while retail investors like us just look at each other in despair. So you can take a look at my portfolio to seek some solace as well. Even though I don't know what good does it do to you personally, but I guess in the name of transparency, you should like that smash button to help me get to 10 likes. Now, TLDR, this is the current breakdown of my portfolio. Pause this video, screenshot it, and have a good laugh. Like I said, Falling Knife is my middle name. As you can see, at least 80% of this portfolio is concentrated into one stock and one stock only, which is Alibaba. And for those of you who don't know, I don't know why you're on this channel. So clearly, I have also made it my entire personality on YouTube to be that Alibaba addict. Interestingly enough, I don't have an addiction to Alibaba, nor China, nor Chairman Xi. I just put my money where my research is at, and given the current volatile markets, it seems like opportunities are slowly floating to the top, even in the United States market. And if you're interested to know about my current watch list and even my price targets on specific counters or specific securities, leave in the comment section down below. And if enough people highlight their interests, I'll probably make a video on it. So for Alibaba specifically, I know that it might be slightly harder to compute my average because I hold both BABA and 9988 shares. So, for simplicity's sake, I've converted all my 9988 shares to their ADR counterparts by dividing it by 8 and also converted it to a USD based denomination. So my current average for each BABA share works out to around $147. Is your average higher or lower than mine? Leave in the comment section down below as well. Would love to do an extremely quick survey amongst my own audience as well. So for long-time viewers, especially from my previous update, I did add it to my Alibaba position, but not to a large magnitude because I probably only lowered my costs from around 151 to 147. So many of you might ask why. If I loved it at $150, why am I not throwing all my cash and net worth into Alibaba at 90? I think mainly there are three reasons. Number one, I think there are benefits to building a small cash position in today's market to essentially exploit the volatility moving forward. I know many people would like to claim that, hey, cash is trash in today's environment. But cash is not trash when asset prices are going down as well because I get to own more. Yes, this is timing the market, but clearly as stock pickers, we are all active investors. Let's not kid ourselves. So of course, I'm not advocating that the way I'm doing is the right way, but I manage my own money right, so I get to speak for myself. Number two, my Alibaba position, at least on a cost basis, currently sits at around 40,000 United States dollar. So that's slightly high for my comfort level on an absolute basis. So even if I were to continue adding, I would probably do it slowly. Number three, don't give up the entire forest just for one tree. I'm also here to hone my investment acumen and skill set. So I'm definitely exploring other potential investment opportunity that sits on a similar risk-reward spectrum as Alibaba. Now, moving on to my next quote-unquote bull investment idea. I know some of you also have vested interest in Facebook. Surprisingly, I don't know how and I don't know why my Facebook position is in the green. Probably not for long. So I was ready to continue doubling my position in Facebook after their recent earnings because I expected it to be extremely bad given the amount of headwinds surrounding the advertising industry. Objectively speaking though, I thought that the earnings report was quite bad for the recent quarter, but market consensus seems to think otherwise. So I remember starting a position in Facebook at 215, putting in around only $800. I doubled my position when it went to 185, which is where we are currently at. I would double the position again at 160 and double it again at 130. So fingers crossed, if that day actually comes, I would probably have a cost basis of around $150 and around $8,000 to $10,000 exposure. So I think I can work with that. But, a huge big but here of course, if Facebook were to ever visit under $100 and my fundamental long-term outlook and thesis remain largely intact for Facebook as a company, I might double it again. So if you look forward to my clown journey in the stock market, remember to subscribe along this journey and help smash that like button as well. Lastly, it comes to the boring part of this portfolio where I just stick to my dollar cost averaging strategy. So for these two ETFs, namely KWEB and Vanguard Total, currently, I'm putting in around $500 to $600 into KWEB monthly and $250 into VT. So my main goal of these two ETFs is to both track the performance and also hopefully serve as a decent base to diversify my clownery mistakes in the stock market. Obviously, KWEB is still a very concentrated sector bet because I believe that your portfolio should be an extension of the investor's worldview. And clearly, you can tell what my worldview is from this simple breakdown. So I started the DCA into KWEB since late of last year, around September if I remember correctly, and the DCA into VT was only 2 months ago. So why the difference in amount, you might ask? So I think the propensity for KWEB to collapse further is of a much smaller possibility compared to the S&P 500 or even VT for that matter. So KWEB is currently 80% down from its all-time highs. Of course, I'm not saying that it's impossible, but that's just my own humble opinion. Unless KWEB craters to sub 10, I will keep my DCA to $600 monthly. For VT on the other hand though, if it continues trending downwards, I can then have the ability to double or even triple the DCA amount from a much lower base, which is $250 that I'm currently putting in, compared to doubling or tripling the DCA amount of $600 per month. So my name is Tay Chee Keng, I'm not C Chee Keng. I don't have the money printer in my backyard. Now, since I understand my own profile and objectives, regardless of whether the market is trading high or trading low, I'll still be accumulating shares day after day, month after month, but the rate differs. So I hope you get to understand my thought process a little bit better. And on the aggregate, my current portfolio standing on a 1-year basis is down 35%. So this is just simple calculations. I'm using the current valuation divided by its cost. So I did not factor in past profits that were realized, and for long-time viewers, yes, you should know that I was the dummy that liquidated my Microsoft and Apple position in the later part of last year. Oh wells, it is what it is. I also did not calculate in my gains or losses from selling or buying options in this simple calculation. So as you can tell, this clown portfolio is very much highly correlated to the price action of Alibaba because Alibaba essentially makes up a huge chunk of it. But because it's not time weighted and I have been constantly putting money in, the entry is being spread out and in a rather erratic fashion, especially because the clown over here is trying to quote-unquote time the market as well. So with that, I hope you had a good laugh looking at how this dude is trying to rationalize his investment methodology. So I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!